Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. It was a mixed day on Wall Street after Fed Chair Powell announcing that rates are staying put for now, unchanged. And at the end of the trading session, the Nasdaq ended the day higher. The Dow and the S&P closed the day in the red. And is it a promising quarter for Qualcomm? Well, we're crunching earnings results and taking a deep dive into the chip maker's performance. And what direction is Ford now headed in? Investors are watching what's maybe driving that stock after reporting its quarterly results. Well, Qualcomm, third quarter earnings, they're just now crossing the wire. Company reporting a beat on the top and bottom line, but the stock is under some pressure here after hours. For more, Cory Johnson, Chief Market Strategist at Epistrophy Capital Research and host of the Drill Down podcast. Cory, it is always great to see you. Let's start, Cory, with Qualcomm. It looks like we have some initial disappointment in the after hours, my friend. Stock is down about 4%, but what do you make of the results? Walk us through the report.
The results aren't bad here. I mean, we saw some real progress across a lot of product lines. Of course, the concern with Qualcomm is always going to be in mobile phones, but as they grow out this business to be in other places, they're showing some real strength here. So, in particular, their Snapdragon 8 Elite showing up in some Samsung foldable phones. It's a really hot product category right now. It's kind of top of the line out of Samsung, and they're having great success there with the Snapdragon 8 Elite. They've also showed some really strong growth, throughout their other acquisitions into data centers. There was a company that they bought called AlphaWave, and AlphaWave has seemed to really help them in terms of getting into the data center and expanding their business beyond the mobile phone market. Now, the mobile phone market has been tough for the last year or so, but I think it was generally a pretty good print for Qualcomm.
How would you expect, Cory, on the call that execs try to sort of frame the tariff issue and resulting impact to demand for devices that contain their chips?
Yeah, so one of the most interesting things going on with Qualcomm right now is their automotive business. It's nearly $1 billion. They reported $84 million, I should say, in the quarter. That's up 21% year over year, which is so much more than the growth in automotive sales in any geography. And so what you see happening for Qualcomm is what's happening in the automotive industry, which is lots more silicon in every single vehicle, such that it's a very big business for companies like Qualcomm. But you wonder what's going to happen because tariffs hitting so hard on the automakers, or likely to hit them so hard, and that we might get some clues about that as it relates to the orders of semiconductors. So it's not just tech nerds like you and me digging into these calls. It's a lot of the overall industry, overall economy is going to be listening to what's happening with Qualcomm, because it's going to tell us a lot, not just about tech, but about what's also happening in the automotive sector.
You ask a broader question, Cory, which is about platform independence and why that's a risk for chip makers. Walk us through that.
Well, I think fundamentally, the chip companies want to get, and no company has done this more probably arguably than Qualcomm, which is not only do they get sort of attached to the socket, the space in the phone is their space to lose, they can't lose it, and that they want to have a very unique offering that only they can solve that problem. Problem is, of course, the phone makers don't want that, and consumers might not want that. They want to be able to kind of move services from device to device, and of course, lower prices because you've got lots of competitors there, and that's the kind of real battle going on with Qualcomm and so many others.
I want to switch gears to another name reporting, ARM. Now that one, in the after hours here, Cory, we see that stock down, looks like about 7% right now. What do you make of that report?
Look, it's a really expensive stock. It's a fantastic business model because it's the royalty business, which grew at 25% in the quarter they just reported in the last hour, was really strong in terms of growth, but it's got to be to support this kind of valuation. They had some great success in the data center. They talked about having over 70,000 customers in their ARM Neoverse chips, up 40% on a year-over-year basis. Those are chips that go into the data center and are kind of attached to the devices being built by the hyperscalers, so Google and Microsoft and others, developing around, yes, NVIDIA, but also connecting right there with ARM. And so that's so important for them going forward. We're going to listen to the conference call to hear what we know about data center growth, because a lot of other places we hear just fantastic numbers. We look at the CapEx numbers you guys were just talking about from Microsoft, how much they are spending there. We're at a point now, as of the reports of the last hour, where the biggest companies in technology, Amazon, Microsoft, Google or Alphabet, and are spending $1 billion every day into the build out of AI. They're just kind of amazing numbers to behold. And the question is how much of that is going to show up for companies like ARM and NVIDIA and others. There was a company that I own, so I pay so much more attention to it than others, called Comfort Systems. It's an HVAC company. They make the electrical repair and HVAC repair, but they've got such a big data center business that the stock is trading at all-time highs. They're growing in ways that they never have. You see this, how important this is to the overall economy, the AI build-out. I think that's why these names are getting so much attention, maybe more attention than enterprise technology has received in 20 years.
Last question, Cory. On ARM, if I'm in that name, what in your opinion would be the risks that should be front and center that I need to consider? Is it the exposure to China, Cory? Is it competition? Is it just the semi-cyclicality? How do you think through it?
I think a lot of the things built into this name in particular is the notion that we're going to have edge AI, that we're going to have AI in all of our devices really, really soon. And if that happens, that'll be great for ARM and great for Qualcomm as well. If that doesn't happen soon, if we're still talking about building foundational models and the focus of AI a year or two from now is still the data center, that's not great news for ARM because ARM wants it to be everywhere. I think we'll always, or at least for the next decade or more, still be building out large language models, still be doing foundational work in AI, but it will have proliferated out to the edge. We'll be using AI in so many more things and in things we can't imagine right now. That's where the ultimate big growth is for ARM, and we're certainly not there yet.
Cory, always love having you on the show. Thank you, my friend.
Buddy. Good to see you.
Well, shares of Ford, they are lower after releasing their second quarter results. And here to break it all down, we got Yahoo Finance's very own Pras Subramanian. Pras.
Yeah, Josh, we were talking earlier. So it's an earnings beat, revenue beat, but that's not really what the big story is here. The story is increase their full year tariff exposure, right, to $2 billion, $3 billion if you don't include mitigation efforts. $800 million in tariff hit this quarter in Q2. So that's what's happening. They did put guidance back in. They said full year guidance of adjusted EBIT of $6.5 to $7.5 billion, a little bit lower than what they had in Q1 when they pulled it back in earlier this year. So they're getting this tariff hit, even though they're the most U.S.-centric automaker, because they have to pay tariffs not just for stuff coming from Canada and Mexico, but also they're counting aluminum and steel tariffs. They say that not all the automakers are counting that, and that's why their tariff exposure seems high for a company that makes a lot of cars in the U.S. So lots to discuss in the call. EV losses as well.
I was going to ask, so stock down, what we got? All right, we're down about 3%. Yeah. On that call, what will be top of mind for you in terms of themes and trends you would be listening for? So
they're going to talk about what's going on with tariff exposure. What exactly are mitigation efforts? This came up in a roundtable call just now. They say remediation efforts are higher prices, using bonded carriers to avoid U.S. tariffs between Mexico and Canada, that sort of thing. Will CEO Jim Farley talk about the new tariffs on the UK and EU and how they might be unfair compared to what's going on with Canada and Mexico, right? Will you see a South Korea tariff deal for 15%, where again he's complained about that? It's not fair to U.S. manufacturers who sending a lot of parts over the border, right? So a lot going on there from the call, I think. That plus, of course, we mentioned the EV business still losing money. Good quarter from revenue. They sold a lot of cars, but this is not turning the corner with regards to profitability. So that's going to come up too.
Final question. Who would you say is in a better position to navigate, to weather these tariff dynamics we're talking about here? Would you say, is it Ford or is it GM?
If we're talking about big three, I would have said Ford, and they did have less tariff expense compared to GM. But the thing is, they're saying that GM and Ford don't calculate the same thing. It's not apples to apples, right? So until you get that calculation, it seems like Ford is because they make 80% of their U.S. 80% of vehicles sold in the U.S. for Ford are made in the U.S. That's the highest percentage of any of the big three. So that seems good for them. They are a more U.S.-centric business. Yes, they sell cars in Australia and in Europe and Asia too, but the U.S. is their bread and butter. So we'll hear more about that. But one other thing that could be coming up is some of these companies are making their own tariff deals, right? And there was talk that Ford was trying to do that. Like, let's say you make a deal with Trump saying, I'll build a factory in Ohio if you can give me a better tariff deal. And that's happening, right? That's on the table, which seems totally inconsistent with the national policy of tariffs, right? So that could also come up on the call.
All right, Pross, we'll be listening. Thank you, sir.
Thank you.
Switching gears to Generac, the power equipment manufacturer, reporting second quarter earnings that exceeded analyst expectations, driven by growth in both residential energy technology solutions and commercial and industrial product sales. Net income rose to $74 million. That was compared with the $59 million in the same quarter last year. Chairman and CEO and President Aaron Jagdfeld joins us now. Aaron, it is good to see you. So you reported investors liked what they heard, Aaron. Your stock soared. Walk us through the report. What are you seeing in the business?
Yeah, thanks, Josh. Thanks for having me on. It is interesting. We had a good quarter, right? We had a great Q2. Our residential business remains healthy. Power outages. The activity was a little bit softer in the first half of this year, but obviously we're coming off of a very active outage period last year, right? With three landed hurricanes and quite a bit of storm activity that drove interest in our residential products, and that's on that side of the business. And then in our commercial and industrial business, we continue to see again the need for backup power, the need for resiliency for businesses, for institutions, hospitals, and now data centers. We're a new market entrant here with a new product line that we introduced. We started quoting those products and opened our order book in April. And as we said on the call, we've had a lot of early receptivity to our entrance into the market, and we've gotten some really nice orders already, and our pipeline is growing very quickly. So I think clearly the market liked our quarterly results, but they probably liked kind of our future prospects even greater, especially when it comes to some of the data center exposure. With
the consumer, Aaron, in that residential area, I'm just curious, who is the typical customer there, Aaron? Is there a typical demo, and do most pay in cash, Aaron, or do they finance that purchase?
Yeah, so the purchases, are typically not financed as heavily as you might think. Our typical buyer here is somebody who owns their own home, has probably been living in that home probably for 30 years and has paid it off and is starting to think about, what happens in retirement, how do they make their home livable, and how do they protect themselves from power outages as they age, right? So you're talking about a typical demographic. The market skews older, so about 75% of the buyers for those systems are over age 50, and so it runs the gamut actually in terms of home values, though, which we find very interesting. I mean, the product does tend to skew a bit more rural, and so home values in rural areas tend to be a little bit are obviously maybe not as robust as what you'd see in a metro area. So the product, it skews urban and exurban. We see, again, not necessarily highly financed. These are people who they're in retirement, so they have liquid savings. They have the ability to invest in their homes, sometimes reverse mortgages, other ways to take out home equity loans to pay for the product. And that's been a pretty resilient group in terms of just economic pressure, interest rates, things like that.
Aaron, I also want you touch on that data center business. How big and how fast is that growing, Aaron? I'm curious, what do you see for demand ahead?
Yeah, so this again, we talked a lot about this on the call in terms of just the interest in these products. We're new to the market, but what data center developers are telling us in the 3 to 6 months that we've been talking to them with our new products is there are two major components that they are most concerned about when it comes to the timelines around new projects, and that is access to transformers and access to backup generators. These are the things that they're most worried about in terms of creating delays in bringing new data centers online. So structurally, we think there's a gap in supply in the marketplace by several thousand units. So for us, that's an awesome place to be in terms of a new entrant to a market like this, where because we're new to the market, we've got shorter lead times. We're able to kind of fill up our order book here. And when you think about the long-term prospects, I mean, then you're back to, okay, how long does the data center CapEx cycle run here? And what we're seeing, as I think every other company out there that's got any kind of exposure to data centers, is there's a lot of bullishness around this being, not only a multi-year cycle, but a true secular trend here in terms of, something that could go 10, 20 years on the back of the AI trends here that data centers are enabling.
Final question, Aaron. I want your thoughts on tariffs, just how you're thinking through that dynamic, Aaron, and how, and if at all, you've been sort of reimagining your supply chain.
Yeah, I mean, like every company, we've been watching this very dynamic environment around tariffs play out. We're responding by, obviously we want to try and limit the amount of price that we have to respond with in the marketplace to offset tariffs, but there is some pricing that's going in, but we're working very hard to take our supply chain, and we were already on this journey, to be frank. I mean, if you go back to 2016, 2017, in the first Trump administration, that made companies like us have to rethink supply chain and where our sources come from. And then, of course, COVID hit, and that changed the world in terms of supply chains again. And so we've been on a journey here. Our exposure to some of the higher tariffed countries continues to come down. We've looked at reshoring where it makes sense. We've brought things back to the U.S. where we can. And we're obviously making the necessary adjustments to make sure that we not only have a continuous source of the components we need, but that we can remain competitive with those products in the marketplace.
Aaron, great to have you on the show today. Thanks so much for your time. Appreciate it.
Thanks, Josh.
Stocks closing the day mixed as the Fed holds rates steady, and Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Thank you, Josh. We got to talk about the Fed first, and the Fed was moving markets today, and it wasn't just the Fed. I mean, we got earnings after the close, Meta, Microsoft. I'm going to try to go through some of the moves because this was just a head-spinning day. S&P 500 down a whopping 12 basis points. That was not the big move I was talking about. But let's go to the U.S. dollar index, which was up 1%. It was just a few days ago. It was also up 1%, a little bit more than that. Very unusual to see two big moves like that in the Dixie in 1 week. And I'll show you what's happening on the year-to-date chart. It has been heading down precipitously, but now it is broken to the upside. And I'm going to show you a chart that I showed just a few days ago. This is U.S. dollar index seasonality. We are right in the sweet spot. Here's where we are. White line is right here. Green line is what my map is. And guess what? That green line turns up significantly here. Why do I say this? Because the street is positioned bearishly. Their sentiment is bearish. And so this just means that the dollar could have a long ways to go up. Having said all that, I just got to show you what's going on in the futures market real quickly here. This isn't even a header, but it's just mind-blowing. Copper down 18%. Now, that was on some tariff news, and that came about the same time as the Fed announcement, but it was not because of the Fed in any way. It was all tariffs, but down 18%. Each big point here is worth $25,000. That doesn't even cover the margin. So the margin calls tomorrow are just going to be astronomical. Not only that, gold did move down on the Fed announcement and during the Powell presser. It was actually down 1.72% close to close, and that was the worst Fed day reaction in gold since 2013. So you put it all together, we just had some mind-blowing moves today.
Switching gears, on the show today, we also talked to the CEO of a company that IPO'd, made its public market debut, Ambic. What is going on in that space? What do you say?
Yeah, I had the chance to sit down with Brianna Samuels. She is a venture capitalist, and she also has her own clothing line. And this was on Stocks in Translation. Episode is dropping tomorrow, Thursday, that July 31st. Anyway, we talked about the IPO market and how there are portfolios that these venture capitalists have. They only need a few to hit a home run to make the thing worthwhile. Here's what she had to say about it.
Especially in venture capital, you're playing a rule of numbers and power law. When venture capitalists think of their fund strategy, they know that they're going to make maybe 20 investments, and they only need a handful of those, 1 to 4, to make it big, hit that unicorn status, to return the entire portfolio of the fund. So they know there's going to be several investments that get written to zero.
So power laws, law of large numbers, however you want to play it, they just need a few home runs. Reminds me of a lot of other things in life.
So true, Jared. So true. So the Fed,
yes,
Mag 7 earnings. What else was in the news today?
Stable coins. And this went under the radar because this has to do with the Genius Act. The Treasury announced its refunding needs for the next quarter, and it is going to buy back a bunch of long end bills. And that's not the stable coin part, but that is relevant. So they're going to buy back a lot of these longer term bonds, actually, not bills. And that's going to provide liquidity to the market. It actually helps out the Fed with their quantitative tightening because that's also removing liquidity from the system. So the stablecoin part is interesting because as these things become developed, and the Treasury Borrowing Action Committee was making a presentation of the Treasury on this, they estimate there's going to be up to a $2 trillion demand for Treasury bills. And this is up from about 200 million, 300 million. Anyway, at least $1.5 trillion excess capacity for T-bills. What does that mean? That means Congress can borrow an extra $1.5 trillion. And what does Congress like to do? They like to spend a lot of money. So this is going to enable a lot more spending spending. It's also going to stabilize the market for Treasury bills in a few different ways. I find it really fascinating. I'm going to be jumping into the details and talking about this in future weeks.
All right, thank you, Jared.
You bet.
Appreciate it, buddy. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.